All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to take a look at XBI. Okay, this is the biotech sector. I'm going to give you guys an update on a possible scenario that I think could happen here. Right now, obviously, this is a lot of prediction here, and there's a lot of things that need to go right. But just hear me out on everything. Okay, so we're going to break down the charts, give you guys an update from the last video. We did break through this trend line here from our last video, got a clean breakout and retest too. And we're starting to push higher up here. We'll take a deeper look at it and break down the chart. But I want you guys to understand, I just recently wrote a really good article in it in my newsletter, but biotech is very interest rate sensitive, right? And so what we have here is the inverted 10-year in candlesticks, and then we've got the biotech ETF XBI here in white. Okay, and you can see that these track and move along very, very, very similarly. Okay, and there's an important reason for that, and it makes a lot of sense. We'll explain it in today's video. So you want to try and pay attention to the 10-year treasury yield, right? I mean, there's other treasury yields you can pay attention to, but the TNX, the 10-year, is pretty much the main instrument that people pay attention to. And if you take a look, it's been trading in this extremely bullish channel, which makes a lot of sense why XBI has been so bearish, but it's potentially breaking down and breaking out right here, right? And so we're going to look and see where 10-year treasury yields can potentially go and what you need to pay attention to if you're trying to trade something like XBI, or if you like trading the leverage instruments like LABU or LABD. Obviously you're going to want to pay attention to what XBI is actually doing itself. That's going to paint a clearer picture, and then you can use one of the leverage instruments if that's something that you're interested in, to go long or short. Right now, I don't really trade LabU or LabD. I'd rather trade options on something like XBI, but to each is their own. Right now, obviously the content provided on this channel is just for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. All right, and as I mentioned before, if you're new to the channel, I did start a completely free newsletter for you guys called Investment Intelligence, giving out free finance content and free trade ideas. Right, I try to sprinkle in 1 to 2 free trade ideas every single week for y'all. Okay, and this was the last one here on Tesla that we had, the last Tesla trade idea, highlighting the conditions, showing the chart. This was one on XHB. This is another very interest rate sensitive one, highlighting a lot of the different home builder stocks and ETFs, and how they were on the brink of basically going bearish. And then that XHB ended up dropping down over 18.5%, right? So really good trading opportunities. All right, this was another one on SWK, rising wedge, highlighting some of the price targets we think it could come down to. Again, you can see that trade played out very nicely. So if you're fans of free, valuable finance content and you like free trade ideas, you want to get those straight to your inbox, definitely sign up for that newsletter using the link in the description. There's also the Investment Intelligence Discord. It's less than a cup of coffee a week. All right, and you can join that to get access to all of the different plays that I'm looking at, whether it's stocks, bonds, commodities, crypto. I pretty much trade them all and provide really good analysis and very good resources for data and analytics in the Investment Intelligence Discord. Now, we'll get into the video now, and XBI obviously is the topic of today's video. And here's what we're going to take a look at, right? And here's what we're going to break down. So, we've been tracking it very well. We mentioned the 2 demand zones we had, and we gave our bearish price target to the downside. You can see it came down to that bearish price target and dipped below a couple times, but ultimately we knew that once we were flipping this demand zone to an area of supply, aka breaking it as support and retesting it as resistance, as we did here, we knew most likely we were going to come down to our bearish price target. In one of the latest videos, we talked about some bullish divergence forming. So take a look how we have a low here and a lower low here, right? Price of the stock is going lower. But on your RSI, this is your relative strength index. It's going to give you the relative strength of a stock at its given prices. You can see we actually made a low and a higher low. So we actually created a bullish divergence is the name of the term for this. And it's an indicator you could see some bullish activity. Now, what we've done here is wave 3. Okay, and the reason I think that this could be wave 3 is because it came right here to the 1.0 extension. Right, very cleanly just tapped it right there. Right, so we have a 1 up, 2 down, 3 up, and then at some point we would be expecting a wave 4 pullback. Okay, and that could launch us up to wave 5 territory. Now, if you're not familiar, markets tend to move in 3-wave or 5-wave structures. Okay, and your 3-wave structures are typically what's known as an A, B, C. Okay. And these are corrections. So XBI has been in a very large downtrend. And then your 5-wave moves are typically the impulsive moves, right? So, your odd numbers of the waves, right? So wave 1, 3, and 5, typically those are going to consist of 5-wave moves, and your wave 2 and your wave 4, those are going to consist of 3-wave moves. Now, if that sounds too complicated, just think of it like this, right? So we've had a huge bearish move to the downside. Okay. And it would make sense for us to get some type of a correction back to the upside. So we would be looking for an ABC correction. So basically what we have charted up right here, this would be our A. Okay. So these 5 waves would be A, right? Right here. And then we would get an ABC down. Okay. That would be wave B. And then another 5 up would be wave C. Okay. And so this is a scenario that I think XBI is potentially setting up for, right? We had the huge move to the downside. Okay, we can call this our 5-wave structure to the downside, and then we would be looking for an ABC back to the upside. And these are going to be the targets for them. And look at how well they align with this trend line, right? We've rejected this trend line initially up here. It's not shown on this screenshot, and then we rejected it here. We rejected it here twice again. And so it would make a lot of sense for us to get an ABC correction that gravitates up toward that trend line right there, which is going to be around 86.78. Right. Another factor, right? If this is a 1, 2, 3 up and we're expecting a wave 4 pullback, that would end up creating an inverse head and shoulders, right? With the left shoulder here, right? The head, and then the right shoulder here. That would be a very clean setup here if we were to potentially get an inverse head and shoulders. Now, this blue box right here is what's known as a gap, okay? There's a gap in between this candlestick, and these gaps, they tend to fill about 90% of the time historically. The big question, right, is when. So sometimes they take a very short amount of time to fill, right? Days, weeks, months. Sometimes they take very long times to fill, right? Periods of a year or even years. So we want to have this charted up, and we want to be aware that we could pull back and fill this gap. And as we mentioned, it would actually align with the structure if we were to pull back into that gap and fill that gap for our wave 4, and then we would look for that wave 5 up, right? Wave 5 up would also be right around 78.49. Now, let's go back to some simpler concepts with supply and demand, right? So demand was our old support, broke down, retested it, all right, and then we dropped lower. Now we're retesting it again. If we drop lower again, all right, that would make sense because now this is in the supply zone. It's an area of resistance. That prior demand is now new resistance, new supply. And so it would make sense for us to be battling that zone and battling that area. But the more times you test these levels, the weaker they're going to get, right? You can see we tested a little bit over here, tested a little bit over here, tested it over here, and then they got weak and we broke through. If we start to keep testing this area, we tested it here, we tested it here. If we pull back and test it again, it's very possible we can break out to the upside. Now, 73.36 is going to be the key level within that, overhead zone now. Okay, area of resistance that we're going to be paying attention to. And if we break through there, look at where the wave 5 target takes us back to the prior demand zone, right? Back to an area that we haven't tested as resistance since we've broken down through it. So if we do end up getting a 5-wave move to the upside, it would make a lot of sense for us to get resistance up here at those wave 5 targets, and then we would get an ABC to the downside. And if we can get find support after putting in a C wave down and start a new bullish structure, 5-wave structure to the upside, then again, the odds are that more increased that we can break through that resistance because we'll be testing it again, right? And the more times you test these levels, the weaker they get. So it may seem super complex, guys. We'll see ultimately how this plays out, but I'm definitely going to be watching this, right? And remember, we talked about how sensitive it is to interest rates. Okay. And this is the XBI in white here versus the 10-year, right? The negative TNX on Thinkorswim. This is an inverted 10-year treasury yield chart. So as you see these candlesticks go up, it means that the treasury yields are actually going down. And as these go down right here, basically you're seeing, treasury yields are going up. Okay. So it makes sense if biotech is very sensitive to interest rates and interest rates are going up because these candlesticks are inverted and going down, then it makes sense that we're seeing biotech continue to drop down further, right? I mean, that would make a lot of sense. And so we talked about how biotech has been in this large downtrend as interest rates have been going up. Okay, and if we take a look at our 10-year treasury chart, obviously the treasury yields and the interest rates have been very, very high, right? And super bullish, honestly. But we're at this point now where we broke through our bullish channel that we tested 3 or 4 times here. There's a gap down to fill on TNX, which is going to be really, really interesting to see if we can fill this gap. It's basically right just below 4.4. Now, if we break below 4.4, we have 4.128 and 3.921. Those are going to be the key support levels for the 10-year treasury yield and areas where it could potentially gravitate towards if we do break down out of here. Now, what we need to be cautious of is some type of look below and fail where treasury yields actually just come through here. And when they come back up for the retest, rather than getting a rejection and heading back down lower, sellers fail, right? And what happens is you have the opportunity right here on a retest to push it back down lower. And that's the time for bears to basically say that they're in control and push the yields lower. And if they don't do that and we get a look below and fail and come back up within this range, it's going to be pretty bullish and indicate that, sellers were not present when they had the opportunity and rather that bulls are in control of the treasury yield. So those are basically all of the main components that you want to pay attention to. I know we kind of went in depth into things and took a look at a lot. But hopefully you guys enjoyed this video, right? And if you did, smash that like button, subscribe to the channel for more. If you enjoyed today's analysis and you want a one-on-one coaching session with me, I do 30-minute and 1-hour sessions all the time, right? You can use the link in the description to go to my Ko-Fi page, click on commissions there, and that's where you can book a 30-minute or 1-hour session directly. You can also request a YouTube video on a specific topic of your choice, or you can click on this buy a coffee button, basically a way to leave a tip or donation for the free valuable content I do put out. Sign up for that newsletter, Investment Intelligence. You'll get those emails straight to your inbox every single week. All right. And you can also join the Investment Intelligence Discord if you guys want access to all of the different resources that I have available to you guys, all of the different charts and analysis that I'm posting, so you guys can see all of the different trade ideas that we're looking at and getting into and how we structure those plays, and basically what it is I look for to get these really nice returns trading options on stocks.